Thank you very much. Mr. Sanders.
Thank you, Mr. Chairman, and I have a statement that I would like to submit to the record.
Without objection, sir.
I agree with much of what Ms. Waters just said, but would like to raise a point. At the last markup that we had, some of us were raising the issue that at a time when the banks wanted some $600 million in lower taxes, or in interest that they otherwise, that they're not getting right now, some of us, as you'll recall, raised the issue that maybe there should be some responsibility on the part of the banks. I know the chairman will remember that. And it seems to me, and maybe in a moment some of our panelists can comment on this, that the bottom line here, it's not a very complicated situation. You have some unethical people who are picking on low-income folks who are having a hard time securing credit from established institutions. And it seems to me, Mr. Chairman, that everything that we're hearing today touches on that very same issue. That if the banks were doing what they should be doing, and that is making sure that low-income Americans had access to reasonable credit at reasonable interest rates, that you would not be having crooks going out there able to manipulate people and rip them off and force them to foreclose on homes that they've worked their entire lives for. So I would ask our distinguished panelists, can they comment on this? Isn't, in a sense, what we are talking today a failure, an indication of the failure of the banking system in reaching out to low-income Americans? Our banks are all over the world. They're investing in every bloody country all over the world. And yet you have millions and millions of Americans who would like to be able to get credit in order to winterize their homes and do the things that they need to maintain their homes, get that credit at reasonable interest rates, but somehow the banks are not there. So I would ask any of our panelists to maybe comment on whether or not what we're really talking about today, whether that is a failure of the banking system responding to the needs of low-income Americans. Anyone want to respond to that?
From Treasury, Congressman and Congress lady, I think at Treasury, while sometimes not seeing it as many years and as many times as you've seen it, it's hard to share the passion that as a boy from Baltimore, I share the passion when I hear the stories about what's happening in my own community there. And I would say this, that we are going to be very specific, not only about legislative solutions, but regulatory solutions in this report next month. In terms of the Congressman's question, banks have receded from these neighborhoods, not in just 2 or 3 years, but over many years they have receded from many of these neighborhoods. And so access to mainstream financial services is limited in many neighborhoods in America, and that is one of the problems, but it's not the only problem. Even within those neighborhoods, there is a problem oftentimes of aggressive sales practices, if one wishes to consider sort of the hustle that goes on in these neighborhoods that pushes people into things they don't need.
But I think you are saying that this is an indication of the fact that banks have left many communities that they formerly served, and that people are vulnerable to these kinds of unethical approaches. Is that true?
I think that does make them more vulnerable. There's also other reasons that, right, in terms of consumer literacy and so forth, but I think that makes them more vulnerable.
I mean, I think we're talking about the need for regulatory action and legislative action. Would anyone else like to comment on that?
I could comment. As part of our oversight of the GSEs, of course, we are preparing new affordable housing goals. We're proposing to substantially increase those goals in order to direct a larger share of the prime lending market into low and moderate income communities and to low income people. We think this will help expand the access to credit in these neighborhoods.
Excuse me,
I'm the FHA Commissioner, William Apgar.
Okay. Anybody else like to comment?
Donna Chenoweth for the FDIC. I would like to say that, yeah, on the one hand, we need to distinguish between our insured FDIC-insured institutions and these other types of lenders outside the insured arena that are engaging in these predatory lending practices. Now, on the one hand, we have to say, yeah, we don't want to see these practices by the non-insured entities, but on the other hand, we do have to see these insured entities saying, come to us, yes. And that's why I said earlier, it's a challenge. We need to challenge the mainstream lenders that they have to make a greater effort to serve the areas that are targeted by these predatory lenders.
You're right, but you can talk about challenging them, but we have been failing. I mean, isn't it true? The gentleman who just spoke a moment ago said that in the last number of years, banks have been receding from low-income neighborhoods. Do you agree with that?
I don't know that they've been receding. I mean, they've been making a tremendous effort, and I think the efforts under the CRA reflect that. But definitely, we know from anecdotal evidence that there is a growing trend, and we're seeing more and more of these types of egregious cases.
But you're seeing more of these egregious cases because responsible, legitimate banking institutions are not there. Why would I want to pay substantially higher interest rates if I can go into a bank, be treated with courtesy, and get a reasonable price loan? Am I missing something?
Yeah.
All right, but you say challenge. We have been failing for many years, and it seems to me, does anyone disagree? Maybe there might be somebody up on the panel who will disagree. I am suggesting the banks are withdrawing from the needs of low-income people. Anyone here disagree with that? All right. Do you disagree, sir?
No, I don't. I want to just give you an example, Mr. Sanders. If you drive across 125th Street in New York, which I did recently, going from LaGuardia Airport over to the west side of New York, you go through an area of tremendously vibrant economic activity. But I counted 2 financial institutions in the whole width of Manhattan Island. One was a branch of a Puerto Rican bank, and the other was a minority institution. There were no mainstream financial institutions in that area of tremendous economic activity. And the challenge, and as you're right, you can see plenty of check cashers and fringe providers. And they move in where neighborhoods are abandoned by mainline. The challenge is how do you get them back?
That observation, that is my observation as well. Mr. Chairman, I think the bottom line is yes, we need better regulations to prevent absolute fraud and deception. But on the other hand, the truth of the matter is we have failed. We have failed. The idea that we're sitting here talking about helping the banks to another $600 million, we bail them out on IMF, they're making record-breaking profits, and then we hear the horror stories because they're not in low-income communities. That is not their failure, primarily. They need to do a much better job regulating. That is our failure for not demanding that the banks serve all the American people rather than their wealthy friends. I yield back.